Welcome to Flip the Cap, the insurance industry's premier podcast, where insurance insights flow and trending topics are always on tap. I'm joined today by my friend Anthony Manna, who's the Senior Vice President at Jencap and also a very highly sought after professional lines broker. He's dedicated the last 15 years of his career not only to Jencap, but specifically to the professional management and cyber liability lines of business. He's Insurance Business America's top specialist broker in 2021 and in 2024. So he has lots of insights to share with us today. So without further ado, we're going to pop the top and get into it. Are you ready?
Very excited.
Okay. Well, we always like to start the segment with a little bit of getting to know you. And I happen to know you absolutely hate surprises. So something I didn't tell you we're doing is a lightning round, a little this or that. So I'm sorry, and you're welcome.
We're starting with that now?
We are.
Oh, my God. Okay. I'm ready.
Sorry, Anthony.
It's all right.
So don't overthink it.
Okay.
That's it. Just a quick lightning round. Sing karaoke or dance in public?
Sing karaoke.
NSYNC or Backstreet Boys?
The Backstreet Boys.
Okay. Country or rap?
Ooh, country.
Okay. Saltwater or freshwater?
Freshwater.
Star Wars or Star Trek?
Star Wars.
Cautious or thrill-seeking?
Thrill-seeking.
Early bird or night owl?
Both.
Never sleeps. Okay. Football or basketball?
Football.
Okay. Toilet paper over or under?
Ooh, under.
Okay.
It's the only way to do it.
Yankees or Mets?
Yankees.
All right. Fiction or nonfiction?
Nonfiction.
Okay. Hulk or Thor?
Ooh, Thor.
Okay.
I like that one.
Costume or cocktail party?
Oh, how about a cocktail party while wearing a costume?
Not the question, but snow or sand?
Snow.
Okay. So I'm going to ask a couple of other questions just so our viewers can get to know you a little bit better. What book or movie had a real profound impact on you, whether it was just a perspective shift or something that really resonated with you?
Yeah, great question, too. There was a book I was given by an old boss probably 10, 15 years ago called Who Moved My Cheese by Spencer Johnson. And it's a book that follows, and this is going to sound weird, two mice as well as two little humans in a maze to find cheese. And the point of the book is to show that through different changes and obstacles and adversity that occurs, you still find a way to get your cheese. And cheese represents happiness, success, or whatever you sought out or whatever you desire. So throughout the book, two of the mice, as I say, they find new and innovative ways without overthinking to find where their cheese is, while the two mini humans are overthinking it, they're getting down on themselves, or they're not staying the course. And I felt that book taught me to, and even at a young age, to just, no matter what happens in your professional, personal life, to find ways to adapt to change and ultimately stay on path to success.
Well, the book obviously had a good impact. You've been very successful.
Say I found my cheese.
There you go. What's one of the best or most worthwhile investments you've ever made?
I would say the best investment I've ever made is, at a young age, was working different jobs. From the ages of 15 through early 20s, working in a restaurant as a bartender and waiter, working for a telemarketing firm doing like cold calling for market research. Yeah, it's as brutal as it sounds, but it teaches you a lot about rejection, number one, and talking on the phone and trying to have that persuasive mentality. But overall, just doing different things and taking different skills and traits you learn from each of them and applying it now, 10 to 15 years later, in what I do.
Yeah, I like that. It also gives you, in various different settings of life, because you've walked in the shoes of someone that you're interacting with, like there's a lot more grace that's given and a lot more understanding to know, like, what's it like to be on the other side of me? Like, you've been there. There's hard days.
Especially as a bartender, or especially as you're, someone who's calling. You really feel for them and understand what they're going through.
Thank you for your call. I still don't know what. I still don't want what you're selling. Goodbye, politely. Click.
I wish people were polite about it, but.
Yeah, I know. What's one piece of advice you would give your younger self?
Keep going. And coming from a big family and lots of kids and, mainly lots of adversity and things to overcome. And, there are a lot of things that can discourage you in life. And there are a lot of things that you think will hold you back, and a lot of things that will, you feel that may derail you, and you get in your head, and you just try to stay focused. And if I could tell anything, would be just keep going. Keep working hard, keep doing what you're doing and trusting the process, and one day it pays off. And you won't even realize when it does. You'll just wake up and you're there, and you've accomplished things that you wouldn't even thought of and you didn't even realize you were accomplishing. So rather than get discouraged, just keep going.
One foot in front of the other. What's been the best year of your life so far, and why?
The best year of my life. This is going to be a very corny answer on this one. The best year of my life is next year. And the reason why it's always next year is you work hard this year and last year and the year before, but every year you work hard and you focus yourself on personal and professional and relationship accomplishments, whether it's health, physical, mental, whatever it may be. You focus yourself so you make next year better. Whether it's accomplishing goals, whether it's getting in shape, whether it's writing more business, whatever it may be, you're working hard now to make next year your best year. And if you always keep that mentality,
Anthony, I like that.
You always keep that mentality, next year will always be your best year.
I think that's fantastic.
Thank you. You should keep it in mind, yeah.
Well, we're going to take a quick break, and when we come back, we're going to flip the cap. 2 tosses is the score to beat. In full disclosure, we are sunsetting this game, and we're going to transition into something else because our leaderboard's getting too long. So this is it, Anthony. Your boss happens to hold the record for 2 tosses, so no pressure. Let's see if you can take this on home for everybody. We'll be right back.
Flip the Cap is brought to you by Jencap. Jencap is one of the largest wholesale intermediaries in the United States, with expertise in wholesale brokerage, binding authority, and program management. Jencap has specialized divisions and affiliate companies that provide niche expertise, unparalleled market access, and nationwide influence. Encompassing expertise from every corner of the industry, Jencap is the ultimate award-winning insurance family. Put Jencap to work for you.
Welcome back to Flip the Cap, the insurance industry's premier podcast. I'm joined today by Anthony Manna, Senior Vice President of Jencap and highly sought after professional lines broker. Coming up, we're going to talk about some mind-blowing trends that are happening in the professional lines industry, some really important education surrounding ancillary lines of business that you probably don't even know exist, and lots more. But first, we're flipping the cap, baby. 2 has continued to be the score to beat, and as you see in the leaderboard, it's getting very long. And we're hoping, Anthony, that you can bring this on home because we're going to soon sunset the game. So really, all eyes are on you. We're counting on you. You happen to be a very tall human, so I just want to reiterate the rules of engagement here. Because you're so tall, you're going to be inclined to just drop it in. But your hand just can't pass the table. That's really it.
I've been looking forward to this my entire life.
I bet you have. Yeah. You've been practicing?
Oh, every night.
Okay, let's see it.
Night.
Let's see it. Let's bring it on home. Yes! Finally!
Let's go.
Finally, there's no more score to beat. You are the champion of Flip the Cap, Anthony.
Woo!
Well done. I'm so happy. Congratulations,
Thank
man.
you.
So let's set the framework for our conversation to really dig into professional management and cyber liability lines. At the highest level of the industry that you work in and day out, what are some of the most relevant emerging trends that our agents need to be aware of and following?
I think it's really important that our agents understand what's happening with EPLI today. In the past, EPLI had been a newer coverage with a lot of uncertainty to the types of claims that were coming in, as well as the types of rates and retentions insureds would see year after year. Now that it's been around for a little bit and markets have some experience in underwriting it, we are seeing more stable rates. We are seeing also a lot of availability of it as well, which may not necessarily be something positive for the environment. With new MGAs and new carriers come left and right trying to get into the EPLI space and offer this coverage, some are doing whatever they can to win the business and to write policies without offering the full scope of coverage that they may need.
Okay.
And our jobs as a broker and our retail agent's job is to understand what the insured's true exposure is within EPLI, Like, do they have independent contractors on their staff, or are they contracting independent contractors and need to extend coverage to them? Do they have leased employees? And if so, are they being covered? A lot of insurance policies will just, or a lot of EPLI carriers will just throw out a good number, and insureds will just jump at the best premium, where they really should be sifting through to make sure that the proper EPLI coverages are included. Wage and hour defense costs is huge, obviously, and has been for a long time. We are seeing some carriers go from where they were offering 50 and 100K sublimits in the past to offering 150 and 250. California for EPLI has been one of the most difficult states to work in.
Aren't they always?
They are. Don't get me started. Yeah,
I know.
It is. Retentions were starting in the six figures in the past, and now we have carriers that are offering 25, 50K for EPLI risks for some of the smaller and more favorable ones. To sum up on EPLI, it's in my opinion, it's stabilized, but keep in mind that just because it's softer and just because there's more carriers doing it doesn't mean that it's always the right enhancements are included in what's being offered. Another trend, or another emerging trend I'd like to go over, is cyber liability and the increased demand for it. And with the increased demand is the more sophisticated hacks that are coming about. I attended a cyber summit actually in the past week that went into detail about cyber liability, not just what it is and how underwriters are viewing it and what controls they're looking for, but how hackers are just becoming more and more sophisticated, and it's easier to be a hacker.
It's terrifying.
Literally, you or I could be a hacker tomorrow if we wanted to. And just thinking about how you don't have to be some tech nerd to hack into people. You could buy the software to hack into people. I mean, it just shows the infinite amount of breaches that can occur over the next 6, 12, and few years.
But the way that you even say that, it sounds like it's like this sexy thing to illegally be. I mean, it's become like, you can do it too. Why don't you try? It's like, no, don't try. Don't.
Well, I mean, it's always more fun to do something you're not supposed to do, right? So, and what we're seeing now, it's something called ransomware as a service, where literally you or I could go into the dark web, not that I even know where that is, but we could go into the dark web and we could buy the program that someone would use to hold a company's system ransom. Whether it's $5,000, $10,000, they give you the program. You can then hire another company to show you where there's open ports or open data points in a company's network. So you can go into their network with the software you purchased from company A, hold them ransom for $50,000, $100,000, $1 million, whatever you want, and they're paying. Companies have to pay for this if they need their systems. There's also double ransomware, and this is where it gets even crazier. You have a ransomware, someone pays it, and they think that they're clear and free. They think that their systems are now are safe. Are safe. That same bad actor or that same hacker who was in will then come back and say, "Well, we let your systems go. Thank you for the money, but there's more. We want more money, or we're going to release all the information." So they're really double dipping. So not only is it becoming easier for everyday people to hack into companies, these bad actors and these hackers are double dipping to take advantage of insurers or of these entities even further. So there's an increased demand in cyber because everyone can be hacked, everyone is seeing claims, and anyone can be a hacker. So these ransomware and these data breaches that are occurring were initially thought to only be targeted towards large entities and large corporations, when in reality everyone is being targeted. These hackers if they're getting $50,000, it doesn't matter if it's coming from a Fortune 500 company or a mom and pop shop down the road. Now, this segues into the next emerging trend is the insurance lines that we do in the professional space, E&O, D&O, EPLI, crime, cyber, it's for everybody. It's not just for large companies. And the reason why is these smaller entities not only do they have less controls, not only do they have less policies and procedures in place, not only are they not as sophisticated with strong IT departments or what have you, but they're more susceptible to going bankrupt if they incur such a large loss.
Right.
These companies don't have hundreds of thousands, if not millions of dollars on their balance sheet in cash where they can pay out a claim should it happen. a Fortune 500 company gets a breach, or they have an EPLI claim and they're paying out a couple $1 million, it hurts, but they're not going under. The mom and pop shop up the block, if they suffer $500,000, they're filing for bankruptcy in the next few months. So it's important that, outside of the typical casualty lines that everyone knows that they need, that the professional lines and, the financial liability driven lines, they're pitched and they're sold and they're offered to everyone that's operating any entity of any size.
What's the cost association these days? Is it a huge lift for a mom and pop shop to secure all of these lines that they need to make sure that they're protected, or is it financially not as much of an investment as it was years ago?
No, great question. I mean, it's obviously relative to how large they are, but the market is soft enough across D&O and EPLI and cyber and so forth that it's very affordable. They're not spending hundreds of thousands of dollars on insurance. Depending on the size, depending on the operation, location, and so forth.
It shouldn't be that hard of a sell.
It's not that hard of a sell. And at the very least, it should be offered and, let them make the decision if they want to go with it or not. But, knowing that the claim environment that they're in, I'd imagine a lot of them will take it when they're properly educated on it.
That makes sense. So I'd like to pivot a little bit. D&O, EPLI, E&O, a lot of those primary professional and management lines get a lot of airtime. But there are a lot of ancillary coverages that don't get a lot of airtime. And because of that, a lot of our agents either don't think that they apply to a risk that they really do apply to, or they may not even know that the coverage exists at all. So I know that there are a couple of lines that you wanted to take the opportunity to really provide some education around, and the first of which is CPPI. So talk a little bit about that line of coverage, the importance of it, why agents need to be aware of it and to be offering it to their clients.
Of course. CPPI, meaning Contractors Professional Protective Indemnity, is a blend of a professional liability policy with a protective indemnity policy, as the name would obviously tell you, and it helps cover the claims for contractors that a GL policy won't address. The professional part is obviously claims that are arising out of their services or the failure of them to provide their construction or contracting services. When you flip over to the indemnity side, the protective indemnity side, it's extending a liability coverage to the contractor for any failure of the underlying subcontractors, like maybe the architects or so forth, to protect them vicariously. So if an architect or so forth has a claim and it ends up dragging in the overlying contractor, if their limits aren't sufficient enough to extend to the contractor is going to be liable or going to be dragged in and have to pay out, whether it's just defense costs or anything from there. The protective indemnity will sit over the underlying subcontractor and provide them that additional layer of coverage for obviously running the project being on the project and running it. The two coverages together in a CPPI are often required in a lot of projects or a lot of bids that contractors are making, and we've seen a lot of markets that are designing project-specific policies that will have built-in ERPs that are required. So it's not just buying a policy and renewing it every year and then buying an ERP. It's buying one package that meets the requirements of the contract holder, or whoever they're making the bid to. It's, let's say, fairly new in the market, and it's something that we've sold a lot of over the last, probably 3 to 5 years, and we're seeing increased demand for it every day, especially as there's more construction going on every day.
Reps and warranties is another coverage line that agents often think is just an extension of D&O, and they don't need it, and or agents have no idea that it exists. So talk about that coverage line, the importance of it, and just educate agents on when it's relevant and necessary.
Of course, and you're right. A lot of agents don't know what it is. They assume it is a division or a supplement or supplementary coverage of D&O. Reps and warranties is known by lawyers and accounting firms and bankers as they're involved in a lot of acquisitions, and a few specialty brokers know about it. But reps and warranties is very vital to any acquisition that is going through, as it protects the buyer or seller, or buyer and or seller, for any material misrepresentations in an acquisition agreement. Now, as you even mentioned, a lot of brokers or a lot of agents or a lot of insurers, whatever it may be, assume that this is picked up in a D&O policy. However, any of these breach of contracts would trigger an exclusion in the D&O policy, where they would not address that exposure. There are two types of policies for reps and warranties. There are buy side as well as sell side, and as you can imagine, the buy side is being bought by the people that are buying the company in the acquisition. This makes up for maybe 80 to 90% of the reps and warranties policies that are purchased today. They cover the material misrepresentations of the seller, as well as any seller fraud, whether intentional or not, in the acquisition agreement. Flip side is we do have, or there is sell side policies available. These aren't as common, but they are purchased by sellers that protect them if a suit is brought against them for the material misrepresentation. Now, we've done, a few years ago, when there was a lot of M&A in the market, we were writing an infinite amount of these, and they're happening every day. And although we've seen a slight decrease in 2023, there has been an uptick in reps and warranties policies purchased in 2024, and expecting even more to go through in 2025. So to kind of sum up what it is, protecting either side or both sides in an acquisition, and it's something that your D&O policy is not going to address, and it's something that needs to be offered and sold and mentioned in any merger acquisition that's going through.
I think it's also just, this is a Jencap podcast, so we can have shameless plugs wherever we want to. But we have dedicated specialists. These are very labor intensive, very, very detailed coverage types. And, people think about reps and warranties for these, $100 million plus acquisitions, but Jencap also has a ton of options, specialization, market access for those smaller, even $20 million and lower acquisition costs. So that's something that's very unique in the market that agents should consider us for. Not just the really, really large, complicated acquisitions, but even some of the smaller ones really need this coverage, and we have the market access for it.
100%. The enterprise value doesn't start at $100 million and up, or $20 million up, as you said. It starts at $1 million, or starts at $500,000. So even the smallest acquisitions are ones we can find proper reps and warranty coverage for.
The resounding theme of this podcast is everyone deserves coverage.
Exactly.
The small guys, the big guys, everybody.
Insure them all.
What are some of the other ancillary coverages that you think really deserve some airtime and education for agents?
Yeah, some of the other ones, again, ones that agents may think are covered elsewhere. Some that come to mind is sexual abuse and molestation. This is something that's normally seen in a GL package policy. More often than not, depending on the class, obviously daycares, churches, and so forth, they're being excluded, forcing the broker or the insured to go find sexual abuse coverage elsewhere. Now, within our professional lines department, we do have access to markets that offer standalone coverage, a few different carriers that are jumping in, and even more that are looking to get into the space because there's a growing need for it. Outside of sexual abuse and molestation, tenant discrimination is a hot topic for all property owners, property managers, and really any real estate risks. Your typical property manager E&O policy or your property owner EPLI policy does have some third-party coverage on it, which would address some of the tenant discrimination. However, a lot of carriers are stripping down this coverage or adding specific exclusions for tenant discrimination, or increasing retentions, offering sums, whatever it may be, to limit their exposure, thus forcing, brokers and agents to go out and get standalone tenant discrimination policies.
That all makes sense, and thank you. I'm sure agents appreciate the education on that. I know I did. The professional lines market is soft. That's no secret. It has been for some time. So where does Jencap, where does a wholesaler come into play in a segment of the business that is so soft?
Yeah, I believe that we're even more needed now than we are in a hard market. With lines of coverage, different coverage lines or different professional coverage lines being so available to agents, it leads them to believe that they can just go to their standard markets, pick a premium, pick the lowest premium, and here we go, and then just offer it to the client, and they're good. However, in this market, again, and I mentioned this earlier, with new carriers coming to the space, new MGAs, new writing papers, people are just putting out products that may not have the extensions that you need. Like I said, EPLI may not have that wage and hour or that tenant discrimination extension that it needs, or the cyber may be missing some ransomware, or the E&O is not really including some contingent BIPD or what have you. In a soft market, there's more available, but that doesn't mean that the right stuff is available. Having an abundance of good doesn't mean that it's all going to fit the actual insured that's looking for the coverage. So where Jencap comes into play is fully understanding the risk that's being brought to us, surveying our markets, and we do have dozens, upwards of 60 or 70 different markets for any risk or coverage, and really seeing who is offering the best product and then tweaking it a step further. We're not just taking it and handing it over to the agent. We're going to make sure that we're digging into it and adding coverages, adding different supplements, removing exclusion, whatever it may be, and tailoring it to that insured.
Well, that just further speaks to the power of Jencap. That's what we're all here for. So thank you so much for joining. I wish we had more time to talk, but it's time to go. Yeah. You are tuned in to Flip the Cap, the insurance industry's premier podcast, where insurance insights flow and trending topics are always on tap. We'll see you next time. Cheers.